Hi, good morning, and thank you for joining today's session called Never Waste a Good Crisis, How Sustainable Bonds Can Be Part of the Solution for COVID-19. For those of you who don't know me already, my name is Patrick Seifert. I'm running the primary markets business at LBBW, and it's my pleasure to run through today's workshop, which is going to be a special one for sure. We've been doing these sustainable workshops for the last 5-6 years, and this one, at least in recognition of circumstances, is going to be the one with the best carbon footprint. So at least there is also something good in every crisis. And along those lines, we will be discussing implications of the crisis are fairly known to everyone. There's no doubt we are going through a very challenging situation. Eurozone or EU GDP just came out minus 12% for Q2. We've had a week-long shutdown across Europe and still seem to be facing a second wave of infections. We have businesses like airlines still running at a very low level of capacity. We have government programs probably coming out at 10 times the size of what they were at the time of the global financial crisis. And a majority of us still working from home, which is just highlighting and illustrating how much our lives will potentially change. So there could be no better time to discuss the role of sustainability and how it can be part of a solution to overcome this COVID-19. In alphabetical order, it's my pleasure to introduce my panelists, and we will be running that session in 2 parts, basically. First part is going to be with Saida Eggerstedt, Head of Sustainable Credit at Schroders, Sanna Eriksson, CEO of OP Mortgage Bank from Finland, and Jennifer Johnson, Head of Legal and Economic Affairs at and ECBC. And then for today's part, we have on the one hand side Dominique Heckel, Head of Long-Term Funding at Banque Postale, and last but not least, Roelfien Kuijpers, Head of Responsible Investments and UK as well as Nordics coverage at DWS. Thank you for joining today. My first question would be over to Roelfien. How has COVID-19 impacted your business?
Yeah, thank you very much, Patrick, and thank you for inviting me to today's panel. As almost everyone else, we, in March, 100% of our staff was working from home. Our company took the decision on March 15 that everyone globally was going to be working from home. So it was very, very quick overnight, but I'm pleased to say that everything has worked exceedingly well through the lockdown period and subsequently. Currently, a number of our offices, including Frankfurt, which is our global headquarters, are starting up the offices again. We currently in Frankfurt, for example, have about 30% of our staff working from the office. Based in London, it's a little bit of a different situation in the UK, and we will be planning for a very small reopening, probably later this month at the beginning of October. But having said our business at DWS started off the year very strongly. We had a very strong month of January and February, but then were impacted by the global pandemic in March. But then the business saw a very strong recovery in the second quarter, with net new assets generated of 8.7 billion euros, leaving our first half net new asset raise to 6.2 billion euros, which is a very significant number given the times that we are currently living in. We've also seen very strong engagement from our clients, literally across all asset classes, from equities, fixed income, all the way to private equity, infrastructure, and real estate. We've also seen good investment performance, which has clearly been a driver of the flows that we have seen. And finally, we've seen significant interest in ESG and sustainability more broadly from our clients. And also, if we look at industry statistics, clearly ESG strategies have seen significantly greater inflows than strategies. So it's been interesting that during the global pandemic, ESG, more broadly speaking, across asset classes, has really delivered for investors, and that has been reflected in business activity as well. So despite the global pandemic, a very strong performance at DWS, and everyone is working very well the working from home offices.
Okay. Well, it sounds actually quite, I should say, encouraging at the end of the day. The glass is definitely more half full than half empty on your side, is that? Once you've been able to overcome logistical challenges, maybe in reorganizing the, let's say, the setup and the way your teams work together for the client.
Yeah, I think if anyone would have told us that in January that we would all be working from home 2 months later, and that would work as well as it did, no one internally would have believed it. But I really credit our IT and operations group that it really went seamless. Already we had enough people who were used to working from home 1 or 2 days a week. They were clearly better set up than others. But the implementation of working from home really went smoothly, surprising our 4,000 employees around the world. And people actually enjoy working from home. You mentioned earlier that doing such a webcast is good for the carbon footprint, but we have a lot of people who commute 1 to 2 hours a day each way. And for them, they've suddenly realized they can be a lot more productive if they work from home. And so we also did an internal survey that showed that 85% of the people interviewed want to continue to work from home in some sort of capacity in a post-COVID-19 world. And only 4% of our global population did not want to have an option to work from home. So it clearly shows that COVID-19 has an impact currently, but will have a long-term impact on how people consider working and work-life balance as well.
Okay, well, long-term implications, I think, is definitely something we'd be interested in at a later stage. Maybe to get Dominique in 1-2 hours commuting in Paris, I think it's not unusual neither. What are your observations in terms of how COVID-19 impacted La Banque Postale and your business specifically?
Yes, thanks a lot, Patrick, for inviting me to this workshop first. Well, a bit like Roelfien, we really also had a very important change in terms of organization, because the idea was really to protect workers first, and at the same time maintaining the financial services, and especially for those people that are more fragile than the others, maybe not using internet platforms for their day-to-day operations. So we have a quite broad network. We have a physical presence all over France. So it was also important to us to try to maintain this network working, and at the same time protecting people with new ways of operating. So from home, we also developed a lot working from home during this period. So that's something that is quite new for banks, I would say, and especially when you look at those people that are working in financial markets, especially where sometimes you need to have some dedicated systems to deal to be able to do the day-to-day business. In terms of impact, of course, La Banque Postale took part to the various schemes that were put in place to help people to cope with the impact of the crisis. So, for instance, for businesses, we had the fact that they can have a recourse to guaranteed scheme loans, where we were quite active, and in France it was a very important part of the help that came from the banks. Of course, at La Banque Postale, the market share is not as the one from our peers in France, but we also had some nice demand on that front, and we were happy to respond. Of course, the deferral of mortgage payment as well were quite used, at least till the end of June. Now we have less activities. Then during the lockdown, we really had a quite strong impact of on the everything that is linked to home loans, for instance. So we almost lost two months of home loans production during this period. So, and that is also one explanation for the the lower activity in the covered bond space coming from the French issuers, and especially for La Banque Postale. And also at the same time, we had the TLTRO3 that was launched with very specific and interesting conditions for the year to come by the ECB, where most of the banks, even in Northern Europe, participated, because it's really very interesting financial conditions. So I would say I'm a bit afraid for covered bond investors. Of course, there are also already the investment programs from the ECB that was even now is now stronger than that it was before, and broader. So we already suffered a little bit from the liquidity on covered bonds, and now that we have a lack of new issuance, I think the situation will not really be in a better shape for the months to come. Of course, we are now seeing some pickup in the economic activity. We have a pickup in personal consumption, especially for goods. It's not already very clear for services, because you need a bit more time to see how this will be impacted by the various measures that are being taken in place. But at least the sentiment is better now. So
how happy, Dominique, are you with the policy response, let's say, on both on the European level and also maybe what's being done for France specifically?
Well, for France specifically, I think we very recently had a new plan from the French government, 100 billion plan that will be dedicated to companies, to environment as well, and also territories and social benefits. So we have roughly 1/3 in each. And this is something that will be very important to help to shift towards maybe a more sustainable economy, support employment, of course, especially for young people, help to enhance the environmental impact of big buildings, of local authorities, of also transportation. So, and of course also agriculture, because France is has a quite important part of GDP coming from agriculture. So in that space, we also need to make a shift and help workers to change the way they are doing their job. So that will be something that will be deployed during the course of the coming years. So very important and interesting to follow how that will be concretely feed into and the impact on the economy, I would say.
Okay.
Now for La Banque Postale, I would say that we have one principle, it's to serve everyone. And we have also one approach to offer responsible banking and insurance services. So at a reasonable price as well. So that's more or less the roadmap for us. So at the group La Poste level, as we are part of Group La Poste, we are currently under the review of our strategic plan. So that will lead to a statutory change to offer, to create what we call in French, Société à mission, and this will be a legal status. So that's an important shift for us, and that this will fully align by law the strategy of the group to achieve our public service missions. So this will definitely anchor our commitment to a fair and solidarity-based bank and insurance business model, and contribute to the reduction of inequalities, exclusion, and also support the ecological transition as well. So this is really, in a nutshell, put social and environmental responsibility at the heart of the strategy of the group.
Okay, we'll check with Roelfien how she likes that idea. If this is, let's say, also responding to needs that she gets expressed by her clients, i.e. end clients and investors. Let's say, in terms of, let's say, inclusion of social and sustainable components into business and corporate policy strategies. How do you like that idea?
Yeah, no, very much. I mean, I'm the head of responsible investments. So at DWS, we take responsible investments very serious, and we're trying to create solutions for all asset classes that include sustainability. But I think to the question more broadly, clearly governments are dealing with significant issues at the moment. There's an economic crisis. There is a public health crisis. And there are significant social challenges as well. And then on top of all of that is the issue of climate change, the transition to a low carbon economy and meeting the Paris Agreement goals by 2050. So the governments are dealing with all these issues at the same time. And you mentioned in your opening remarks a quote from Winston Churchill, which is "Don't waste a good crisis." I've used that quote as well, but actually I found a better quote, which was a quote by Rahm Emanuel, who in the Obama White House.
Go ahead.
Who changed he changed the quote a little bit, and he said, "You never let a serious crisis go to waste, and it's an opportunity to do things that you think you could not do before." And I think this is where COVID-19, climate change, social issues are all coming together. If we look at the whole pandemic, and if we look at the last couple of months, if we look currently, we see wildfires, we see significant flooding, we see heat waves, we see the melting of Greenland ice cap, and there have been many other climate-related events. So as governments are dealing with a public health and an economic crisis, clearly the climate crisis hasn't gone away. And then on top of that, we've clearly seen social issues escalate as well. And we've seen events like the Black Lives Matter movement truly global. So this all, in my mind, creates an opportunity for governments indeed to build back better and to do things differently than they were even able to do before. We believe at DWS that the European Green New Deal is a very good starting point and is a very good way of integrating green issues into the recovery plan. And we also believe that Vice President Biden's proposed $2 trillion new Green Deal would be a very good plan for the United States as well. So these plans not only will create greener and more sustainable economies going forward, but they're also significant job creators. And to Dominique's earlier point, and for example, we calculate in our real estate business that 18 new jobs are created for every €1 million that is invested in retrofitting buildings, for example. So overall, COVID-19 is a tragedy. It is a black swan event. It happened. Governments need to deal with it in the public sector. We in the private sector need to deal with it as well. And with total assets under management globally of around 130 trillion, between 130 and 135 trillion dollars invested capital, investors have a very big role to play in this transition to a post-COVID-19 world. And we engage with our clients, whether they are clients investing in private equity infrastructure, private equity real estate, or in public equity markets, or in bond markets, or other asset classes. They are very focused around bringing more sustainability into their investment processes, into the investment decisions, and into the selection of managers that they are ultimately willing to work with. And of course, in the EU, we also have the EU Action Plan for Sustainable Economy and Financial System, and regulations are going ahead next year that will bring sustainability to a much greater level of accountability, which ultimately is good for end investors.
That sounds very determined, Roelfien. I was just about to ask the question about the role of sustainability going forward, but in a way you have anticipated that question, so I might just rephrase it. Between those, let's say, the early adopters and the laggards in some way, where do you find value? Or in other words, is there still a possibility for companies to get away with, let's say, no sustainability strategy, or maybe in very selected cases, or is it going to be more of a deal breaker?
I think so. We within DWS we have a very strong corporate governance practice, the G in ESG, and in that corporate governance practice we focus on all kinds of different issues. But take climate change as an example. We're members of Climate Action 100+, and we have a track record, for example, in the United States, where we as an asset manager vote the most in favor of climate-related resolutions at 98%. So we take ownership of companies as a public equity investor, also as a bond investor, very, very serious. And one, we use proxy voting to put our views across, but we also engage with companies on sustainability matters. Now, back to your question around companies that are in front and that maybe are lagging. The significant of the investment community, both in asset owners as well as asset managers, is increasingly focused on these issues. How are companies dealing with climate-related issues? What is their transition pathway to a low-carbon economy? Do they have a strategy in place? On the in ESG, there's a lot of focus at the moment on diversity issues. The diverse nature of a board. What does diversity look like from a senior management point of view? So there are all these issues and many other issues that can be brought to the table by investors in engaging with companies. And so the answer to your question is the companies that are in front of the queue have an advantage, but the companies that were laggards are starting to see that there are serious consequences on their business models if they don't move forward. And I think over the summertime during the pandemic, something significant happened, and that is that oil and gas companies, BP, Royal Dutch Shell, Total, Repsol was the first one, have actually taken significant write-downs on assets, on reserves that they know are not going to be explored any further. So I always like to say that the transition from a high carbon to a low carbon economy will happen. There is no doubt in my mind that will happen. It will happen everywhere. And what that means is that it impacts every country in the world, every economy in the world, and it impacts every sector of the economy and therefore every company. It doesn't really matter what it is you do. If you are a luxury good manufacturer, if you are a fast retailer, if you are an oil and gas company, if you're an automotive company, we've seen through the pandemic that Tesla is now trading at the combined value of VW and Toyota. It's become the largest car manufacturer in the world, despite the fact that it produces very few cars and it is barely profitable. So why is Tesla trading at such a premium to existing car companies? They have maybe the model of the future with their electronic cars, and the incumbent car sector needs to move from the combustion engine and the diesel engine into electric vehicles, and that is going to take time. So it's a very good question that you asked, but in our mind, as I said, every sector of the economy is being impacted, and investors increasingly ensure that their voices are heard at annual shareholder meetings, in proxy votings, in engaging with management. And that is why the G in ESG is key and is so important in this overall dialogue. And similarly to all the social issues that we have seen cropping out of COVID-19, or the health issues that we've seen cropping out of COVID-19, asking companies, how have you dealt with your staff? Have you furloughed staff? Have you laid off staff? Have you, like DWS, we actually, our CEO made a very strong to retaining the staff on the platform during COVID-19. Our senior management has been very focused on physical and mental health of our employees and created a lot of programs during COVID-19. So how have companies dealt with this? And we've seen, even during COVID-19, we've seen companies that have dealt with it very proactively. And we've seen companies that didn't deal with it very proactively. And one of our studies has shown that the highest correlation to financial performance of any company is a company's reputation. And so companies' reputation is made up of many different things, but a lot of the things that I mentioned before go into corporate reputation, which ultimately will lead to enhanced financial performance. So all these things come together, and ultimately that is what investors are looking at, and what investors want to see from their asset managers in a very constructive and ongoing basis.
Okay. Well, I'll take this almost as a concluding remark of our small, let's say, session, but I'll hand over to Dominique and Roelfien. Your point was, let's say, very clear and loud, in spite of a bit of technical challenges on the connection side. But as you mentioned, let's say reputation is potentially at stake in circumstances like this. Is that old saying about a friend in need is a friend indeed? It's not a good time now to let someone down, whether this is your client, whether this is your colleagues and your staff to some extent. So very much sharing your view here, and then Dominique, over to you maybe for a bit of outlook. What would La Banque Postale do out of this crisis in serving its clients, and let's say in also being a sustainable issuer?
Yeah, no, I think we can fully agree with Roelfien. I think banks as well have to play a role, an important role, with helping to run our clients to run a sustainable business, right? And this must spread into the risk management of banks, for instance. We have to change the practices, we have to change our limits, we have to align our processes. So this is really important and has to be aligned with the strategy and the objective of banks. So I think as a concrete example, we can talk about how banks have to ban fossil fuel financing, for instance. But also there are a lot of things that can be improved at the bank levels. And for La Banque Postale, for instance, we're working on a sustainable KYC grid that will be part of the risk assessment for each of our clients. So this really has to feed deeply into the risk management practices to be sure that that we will be fully aligned with the objective that we are assigned to what we want to achieve in terms of bank, what is the strategy of the bank. So this is really something that banks need to achieve in the coming, not years, we don't have time for years. So I'm afraid that's the truth. So we also have to think about how to help our clients and put in place some financial incentive for the clients that are working in the right direction. So this is also something that we are currently trying to put in place. And this will also help our clients because they will have lower costs for their financing, for instance, and really align the objective for our clients with what we are doing as a bank. So we have to put concrete action on ESG practices, and that is really a shift that all banks need to do to help to move in the right direction for the future.
You seem well prepared, Dominique. What can we expect? What can sustainable investors expect from La Banque Postale in the next, let's say, 12 to 18 months, you think?
We are quite well prepared, yes. But then the question is, do we really need to the funding for the moment? Because no, it's true that there were less
don't become a laggard.
We had less loan production during the years of the lockdown, of course. So we are a bit lagging in terms of home loan production, for instance. Then we were more active for the corporate lending activities, of course, with the loan scheme. And now I think for the future, for the months to come, we need to see how sustainable the growth of the lending activities is. But what is for sure is that La Banque Postale is committed to be active also in sustainable refinancing activities. So we issued one green bond already. We have a very strong social background and public service mission. So I think that it would be quite natural for us to also address some social bonds, like we saw some Covid-19 bonds. For me, I prefer to talk about social bonds because Covid-19 is a bit too narrow in terms of scope, I would say. And I think that banks need to be much more, much larger when they want to address the needs of the client, not just for COVID-19 needs.
Okay, fair point. Okay, thank you very much both for sharing your views. We will be incorporating as part of that workshop also then in second step the views of Saida, Sanna, and Jennifer. Having said that, happy to conclude today's workshop. Thank you very much, ladies and gentlemen, for listening in, and thank you for your contributions. Without any further ado, I'd start with the first question in a nutshell. How has COVID-19 affected your business, Saida?
It's affected in a big time. I mean, looking from a fund point of view or investment point of view, we had to really put our brains together, throw everything upside down, and go back to basic of sustainable investment, looking at things from a stakeholder point of view, from supplier, as you said, from consumer, from very basic things in life like clean drinking water or healthcare. So, it's very sad, as you say, but we have been forced to rethink our investment process.
Is it in a way back to the roots, as you're suggesting, or has there been like
so,
major
yes.
new findings?
I mean, it's as a sustainable fund manager, we, as you know, we had green bonds in the market for a while now, and there have been occasions that I've told issuers, why don't you actually issue a sustainable bond, right? And then, we've talked to issuers, banks, for example, why don't you actually issue a social bond? Because SMEs, banking sector, for example, has bad reputation, and you could cure a bit of that if you show your social side, right? And on the other hand, we've dealt with globalization all the time. And what we didn't think about is, of course, all the suppliers were also all over the world. And, in countries maybe where the COVID-19 safety network is different than where we live. So So a lot of impulses and a lot of kind of going back to the roots of human activities, I guess, and manufacturing and services, and but also a lot of opportunities for sure.
Okay, well, opportunity sounds good. How is it in Finland, Sanna? Let's say mainly opportunities, or also risks involved for you?
Well, I think in Finland we have managed pretty well, but of course at OP Financial Group the COVID-19 crisis has affected the business operations in different ways. While in banking we saw strong demand for the long repayment holidays and some pressure in asset quality during the spring, the insurance business is likely to face only minor effects due to the crisis. Having said that, of course, e.g. claims for related to travel insurance and event interruptions grew in the beginning, but I guess now we are going to a better direction. And in terms of a customer interaction, vast majority of our customers have utilized the digital channels in running their banking and insurance errands. For those events where visiting at the branch office is necessary, OP has actively taken care of its customers and personal safety. So therefore, I think we are in good hands.
So that sounds like an opportunity also to run the bank differently from a let's say distribution channel point of view. Do you think this is things to last?
Well, yes, I think we could say that, and of course in Finland there are the people are probably even more digitalized than in many other countries, and therefore we have had a chance to show our customers that we can do everything online. So therefore it's truly a change.
Okay. Well, let's take the European, let's say, view. Jenny, we've heard about the payment holidays on the EMF ECBC side. What's let's say the consolidated opinion you have on that?
Yeah, I mean, I think one of the first things that I think strikes me is the fact that a crisis such as this really brings into focus how interconnected housing, mortgage, and covered bond markets actually are. And it might be an obvious thing to say, but what we decided to do very early on in the crisis was to basically bring together the two sides of the business, establish a COVID-19 task force, and really try to understand where the areas of concern were potentially to be found in this crisis for the two industries, but also how we could potentially contribute to the recovery. So we held a series of meetings over a number of months. And in terms of concerns, one of the recurring themes from members on both the mortgage and covered bond sides of the business related, of course, to the potential for an overall increase in over-indebtedness, which would, of course, impact on repayment capacity of borrowers and therefore credit quality. Now, for the time being, and this is largely as a result of the unprecedented support measures that we've seen for employees through furlough measures, to borrowers through payment holidays, obviously extended by banks, and also the fact that house prices have remained essentially stable for the time being. The residential mortgage market appears to be performing very well across the majority of countries. And so far, the level of COVID-19 related NPLs remains relatively low. Now, what is interesting to see is that the situation is quite different on the commercial real estate side, where the market is definitely showing signs of pressure, particularly in relation to the retail and hospitality segments. And that's perhaps, an obvious thing to say. But this is obviously a concern potentially for mortgage markets, but perhaps less so for covered bond markets, where proportionally covered bond pools tend to be less exposed to these particular segments than others in the commercial real estate space. We might expect also there to be pressure on commercial real estate markets in terms of office space. For obvious reasons, we're all working from home, and it's quite possible that moving forward, employers will change the way they consider, how they accommodate their staff. But that remains to be seen. I think there's a general sense that it's still a bit early to say. Perhaps one last thing to say in relation to the covered bonds is that, and specifically around rating of covered bond programs, the general sense is that the COVID-19 related rating downgrades in 2020 will likely be limited, very, very limited, by credit protection features of covered bonds, and also by the fact that the outlook for banks generally is relatively encouraging, largely as a result of their comfortable kind of capital and liquidity buffers. The same is true for sovereigns. The outlook is relatively stable. So generally speaking, I would say until now, the situation has been relatively contained by all of these measures that we've seen from the ECB, from national governments. But of course, when those measures are withdrawn or scaled back, only then will I think we start to see whether or not these credit concerns that we identified early on actually begin to emerge. So I think that's kind of an overview, if you like, of what we've identified as being kind of the major effects on mortgage and covered bond markets.
So
and
my takeaway would be, on the one hand side, you spend a lot of time to basically create additional transparency on where the impact is largest. At the same time, you can conclude, at least now, let's say 6 months into the crisis, that the covered bond has lived up to its expectation as being a very robust, let's say, tool. It might not have been that much in need, obviously, because of those additional measures by governments and central banks. But let's say in some way, you've also prepared a foundation for a potentially very long recovery. Now that we are just, beyond the immediate impact, and we still need to figure out how that path for recovery will unfold going forward.
Yeah, no, I think that's absolutely fair. And I mean, I can talk a little bit later, Patrick, about, the role of covered bonds in the recovery, about ESN as well, specifically. And also, sustainability. So I'd be happy to talk about that in a moment.
Let's do that later.
Yeah, let's do that later.
We'll ask the investor first of all. Saida looks, kind of relaxed. So as an investor, I've seen more stressful investors, honestly speaking. So why is that? Is it that, let's say, governments and central banks have, just, done your job in a way by kind of shielding the economies from more severe impact? Or is it simply that, let's say, including sustainability into your, let's say, investment decisions has paid off one way or another?
I think I'm not relaxed, but I am happy in the sense that this crisis has kind of refocused issuers to the important things that I have, I feel as a sustainable fund manager, I guess. And one of them, as I mentioned, was sustainability bond, which is rare, but as you know, even Google has issued one. It's not an issuer, I think, is that great from governance side, but that kept apart. I think many issuers are being innovative. And we've seen like banks like Kuijpers Bank, BBVA, Bank of America, they've all issued COVID-19 bonds. Now, it's not, okay, if the bond is attractively priced and we like the issuer, of course, we invest in it. But what I find is better is that it sets kind of a benchmark and a role model for how issuer can contribute to the society. And on the other hand, when they issue such bonds, they have to increase transparency. So just before I came to the webcast, I was actually making a presentation on green bonds. And I was looking at the green bonds, which has been issued last 1 year, also from US names, like our Dutch name, NXP, a technology company, right?
Yeah.
And the transparency that's gone in there, what they're doing in terms of chips, that's going into EV manufacturing. So that's the other sector, that green transportation, which I think the auto manufacturers were lazy about this carbon reduction target and regulation coming up. They got a push now because, as you said, governments like the French government is intensifying, electric vehicle infrastructure and new autos and everything, and consumers as well. So it's not really the ECB, but it's more like the political solidarity we see in Europe, and if the Democrats come to power in the US, maybe there as well, that they're really pushing a green agenda, a social agenda at the same time, which we should have done anyway. And so I'm happy about that something good is coming out of it. So, and on the other hand, it gives also a lot of opportunities to have dialogues with the issuers, you know, so.
There's two themes I seem to understand from what you mentioned. You spoke about refocusing, and earlier on you mentioned about back to the roots, which sounds similar in a way, by removing the unnecessary or removing some noise around what is the essence of maybe a more purposeful economy. Is that the way you would put things?
Yeah, I think it's getting the priorities right. I mean, if you think, for example, the UN SDGs, you know, I guess when they first came, I talked to even my colleagues or to other fund managers like a year ago, there was a lot of skepticism that it's very vague. But if you really think about it, what they're trying to achieve, you know, that there should be biodiversity, there should be enough food for all parts of the world, or things like that. We can't take that for granted. That's what we have learned, right? Because maybe if the planes are going, you know, aircrafts are going bankrupt, nobody's going to fly our food here. So we have to be self-sufficient and protect what we have. And on the other hand, private sector has a lot to contribute. So I think the engagement, you know, has gone up, and at the same time, it can be financially attractive, you know. So as well from the issuers, if they can show they're going towards carbon neutrality or whatever, and they're doing it in a proper way, it shows leadership, and you feel more confident investing in the name.
Thinking leadership, Sanna, we've heard about, let's say, the role of purpose and setting example. As a cooperative bank that you basically are, I think these principles are not very distant from, you know, where OP Financial Group is coming from. Would you share that observation from Saida in the way you run your business and what clients demand from OP?
Yes. As you mentioned, as a cooperative group and a very big bank in Finland, we feel really responsible of how things are going in Finland. So therefore, I truly agree what Saida said.
Do you see additional demands from clients in these circumstances, or let's say clients and or investors? Do they challenge you more around, let's say, the role of sustainability going forward?
Well, I guess when the crisis started, or before the crisis, there were much more discussions about sustainability. Then it kind of stopped for a while, and now we see it coming back again. And with all these COVID-related issues on the market, I think that it is what it's going to be in the future. So the green is new black.
We've spoken about these unprecedented policy measures, let's say both on the fiscal side and to some extent probably monetary policy too. Maybe also in a way that it's been very coordinated. I think there was also a reference Saida probably made in you know, a couple of things coming together at the same time to be more impactful. From an OP, let's say, a point of view. Are you happy with those policy measures? Is this something, let's say, you know, having a positive impact on your clients?
Yes, I thought that the prompt and extensive measures taken by central banks have truly helped to stabilize and the market, and when the ECB relaunched the asset purchases and offered banks financing as banks. And also here in Finland, the Bank of Finland announced that it would purchase commercial papers worth 1 billion euros on the market, and regulatory requirements for banks were temporarily alleviated in some respects, which was also much appreciated by the market as well. And actually in May, OP estimated that the Finnish GDP will decrease by 6% this year, as it was expected that the exports market and private consumption will take larger hits from COVID-19. However, now in August, just last week, we revised the forecast to 4% decrease, as we have seen some signs of a slight recovery in Finland, as the effects of COVID-19 were a bit more minor than anticipated, especially compared to other European countries, and we've been kind of wondering and seeing why is that, and I think one of the reasons is that we were never in this total lockdown, so people were able to go to the stores, renovate their houses, paint the walls, do gardening. So it just didn't stop. And when we were able to travel, we traveled inside Finland. Okay. So that was good as well.
It needs more than COVID to stop a Finn, I think. Let's say from an investor point of view, Saida, I hear what you're saying, but let's say, shouldn't you be worried a little bit about the degree of distortions coming from this, let's say, fiscal policy measures, but the simple magnitude of those programs that have been put in place and that likely, seem to be continuing a little further, maybe into next year even?
Yes, I am. And having said that, the distortion could have been bigger. I think the way the policymakers did it after the financial crisis, just saving the big banks, I think that was less socially thought and popular, and inequality went up. Of course, if rates are so low, then there is wealth effect and so on, and we know about that. But I think for first time, when I also look at the European Recovery Plan, and that has been focused to certain regions in Europe where there hasn't been any development, let's forget sustainable development, for quite a while now. And, there is focus also in digital education, and what we can do as investors, I think before we criticize others, we as investors have a lot of responsibilities. So, when we are doing some engagement work, let's say with banks, on one hand, on diversity, increasing diversity, we just had an internal review yesterday, and even gender diversity, and forget about racial or ethnic diversity, even that has not really come, even in a developed world, and so on. So, and on the other hand, more disclosure about fossil fuel loan exposure. So I guess we've looked at scope 1 and 2, but it's time to look at what for the bank is scope 3. So whatever they're doing. So we are trying to look at data. We are trying to engage with the banks, and we are telling them that you are getting all the help from the central bank. And as Sanna mentioned, that there have been measures that the banks does not. I mean, they're getting a lot of incentive for the policymakers to actually engage with their customers, the real customers, the customers who might be in need, the vulnerable, or the SMEs, which maybe the loan standards would have gone much harder otherwise. So, and you do see that some banks are using it, especially the ones who are digitally engaged, or the ones who have thought about it pre-COVID, and then there are some ones who are being a bit too careful with, lending out the money, and that will create some businesses to go out of business, and the whole hospitality industry, we worry about that. But the more we talk about these things, I think policymakers will listen. Something will happen, and as investors, we can look at it. So if there are good companies but a bad sector, then we are trying to analyze it in a proper way. That what can one do? So, and to your point, the central bank measures have, of course, helped many businesses who have bond market access to refinance it. But on the other hand, as you say, is the big corporates, maybe they have benefited more because some of them are actually buying back high coupon bonds. They've gone to that stage that they might do something irresponsible at one point. But then again, one has to, as investor, then push those big corporates that can you actually not help your suppliers, or your employees or whoever there is to. So it's kind of a win-win situation.
That sounds good. It's probably a good point in time to mention that we'll be having live Q&A session at the end of this discussion, so you have a chance to type your questions into the Q&A box, and we'd be happy to cater. Taking this forward, I think the notion of further, let's say, selection of survivors of the crisis and those who might have to adopt maybe in a more severe way. Jenny, on your point of view, you mentioned earlier on, let's say, specifically the SMEs, and raising the question if we have the right tools in place to help also if this recovery takes longer than expected. What are your recent observations on this?
Well, I mean, as you said earlier, Patrick, I mean, we've seen unprecedented measures, monetary policy and fiscal policy kind of measures, which have supported households and businesses. But these won't last forever. At one point in time, they will be withdrawn, or hopefully they'll be withdrawn gradually, so there's no abrupt kind of shock. But at some point, the market will have to step in to fill this gap that will be left behind once these measures are no longer in place. And certainly the SME sector is likely to be one sector which requires that extra support. So for some time now, in any case, for some time now, we've been working on what we refer to as ESM, which are European secured notes, to channel financing to the SME sector. So the idea of these European secured notes is that they are a distinct instrument from covered bonds, but nevertheless, it's an instrument that would be structured according to the same kind of legal characteristics like the dual recourse mechanism, etc. But specifically with a focus on SME and infrastructure. Now, we have accelerated over the last couple of weeks and months because there's a definite interest, I would say, not only from the market, but also in policymakers, the European Commission specifically, in this tool. We have accelerated our work in this area, and let's say we've accelerated the work of our task force. Specifically, we have a task force on ESN, and they are really at the moment, as we're discussing now, they're considering, how should we structure this product or this tool. One of the key aspects to its success will really depend on the right regulatory treatment. So the task force is considering, how do you define high quality SME loans? Should they be exempt from bail-in? How should they be treated under UCITS, CRR, LCR, Solvency II, etc.? What about the eligibility for the ECB's collateral framework? So these are all kind of key aspects that our task force are currently working on. Now, of course, this will take some time. The tool and the framework won't be ready tomorrow morning, unfortunately. So the instrument won't be able to support in this initial phase of recovery. But certainly it could play, I think, an important role, certainly in some markets, in particular, Spain and Italy, over the medium to longer term. So this is really a priority for us, I would say, for the time being, and something that we're working on. Yeah. And as I said, is getting a lot of interest from policymakers.
You mentioned Spain, Italy. Does this suggest in a way that you believe the tool is maybe not so much of a European tool, but in fact more targeted to needs you have identified in specific member countries?
Yeah, I mean, I think since we first established this particular, let's say, since we started talking about this particular initiative, there was definitely more interest, I would say, from these markets. I think structurally, the way in which these markets are, the way in which their SME sector is organised, the way in which the kind of the nature of their SME sector means that there is a lot of interest in this. So I think there will be more interest in some markets than others. But certainly our ESN task force is very multinational or multi-jurisdictional. Okay. So we have all nationalities around the table. All
so it's open to everyone, but
so it's open to everybody. But but I would say that there's more appetite in some markets and perhaps more need than in others, let's say.
We've just heard from Jenny about the European initiatives to help SMEs. Sanna for OP Financial Group. What are the client needs you see, and what do you expect in terms of funding for 2021 going forward?
Well, I guess I believe that the green bond market will recover, and there will be continued interest in climate. I think for now on, it's more the funding side, the needs. I think the regular customers, they are still not that interested in sustainability. But of course, when it comes to risk factors or so, and when you can actually see, for example, the green mortgage in the price, that may, of course, changes the situation. But I think that what we've been planning at OP Mortgage Bank, we have this year we have been working with our green covered bond framework, and hopefully next year we'll be able to launch our first green covered bond.
We'll be looking forward to that for sure. Maybe a question to Saida, as you referred earlier on to the fight COVID-19 bonds. I mean, how sustainable of a product is that to you, given the fact that it emanates from an immediate need, which sounds a little bit in contradiction to, let's say, sustainability, long-term implications, etc. So is it sustainable in your view?
I think it depends on the issuer. So the fact is, whenever we invest in a green or social or COVID-19 bond, we first also assess the issuer. So we do the due diligence there. So if it's a bank which has been socially engaged anyway, and also has worked with the communities, and are actually in the situation to bring a COVID-19 bond with very little preparation, and we know the name for a long time, then of course we try to help there, because that's kind of a targeted investment for that time being. And so when like Caixa or BBVA, which are kind of already have done quite a bit of roadshow from their social, side, and I participated there in the fund that I manage. When Bank of America came, that was also interesting, because we're actually trying to engage with Bank of America also on their fossil fuel funding. So it's kind of a give and take situation, it's kind of engagement with them. In fact, I'll say we have been disappointed how little COVID-19 bonds have actually come from companies. Now, like companies like even a big telecom companies or AT&T, names like that, they have actually gone a social mile in the sense that they have given, free services to customers, they have helped their employees. So many social sides of companies actually came out because of COVID-19, right? And even think of our employers, all this flexibility we are getting, whether we are working from work or home and things like that. So the social side of many companies came out. So they could have actually issued more social bonds, right? Because even ICMA changed and expanded the language of social bond, what they're allowing under social. And the SDGs are there, so you could actually make some of the COVID-19 expenditure long-term, right? So it doesn't have to be just one time. If you're like spending in clean water or healthcare or underprivileged areas of your countries, those are actually long-term projects anyway. And Sanna can probably answer that better. And whenever the issuers are investing or using, and there's a governing body for that to look after that use of proceeds, I don't think it's really short-term. It just might sound like that, but I think it goes with the longer-term strategy of that company.
Well, I think I would be a fool to not ask on this question to Sanna. You highlighted before some clients are still a little reluctant maybe to adopt sustainability criteria in lending that they obtain from OP. But if you think of, let's say, your reference clients, your best-in-class clients, how long-term of a strategy has that been for them?
Well, I think that when it comes to sustainability, the companies are in different positions, but I think that everyone is in either in short term or in long term going towards that, and I think that is something that we have to take care in all the meetings that we have and with all our clients, because together we are responsible for the climate and for the globe as itself.
That sounds almost like a good closing remark. But before I do that, I'll ask Jenny maybe for last quick update on what's happening in, let's say, Brussels and Luxembourg. We've heard about very large, let's say, funding programs being prepared by the European Commission. To what extent are these measures kind of paving the way for including sustainability in a more, I would say, systematical manner going forward, and maybe also accelerating the transformation that Saida spoke about before?
Yeah, I mean, I think what for us was really, really interesting and and absolutely fundamental for all the work that we've been doing as well around energy efficient mortgages, is that very early on in this particular crisis, heads of government, MEPs, and many other stakeholders were calling for the recovery to be a green one, so that in trying to recover from this crisis, we wouldn't lose sight of the sustainability goals, which have been so important over the last couple of years. And just as an example of this, I've made a note here on my paper here, but there is a commitment that 30% of the multi-annual financial framework for 2020 to 2027, so it's kind of the budget planning for member states contributing to the European Union, will be for climate-related spending. And this is a recent commitment. So that just shows you that sustainability is absolutely here to stay, and a crisis such as this will not, if you like, change that, will not change the direction. And I think also, I mean, the sustainability, kind of the whole sustainability issue in itself is almost, a fundamental for the recovery, because through sustainability, we can stimulate further economic growth. It helps to promote economic activity in the construction and the renovation sectors. It creates jobs. Yep, yeah, exactly. Yep. So, I mean, we have to look at sustainability in that respect as well. It's so much more than just, kind of lending or issuing, and it's so much more. And so for us, it was really, it was very reassuring, because as you know, Patrick, and we've said this, we've discussed this many times in these kinds of sessions, and I always try to plug our energy efficient mortgages initiative as much as I can, but it was very encouraging for us because we believed before that the energy efficient mortgages initiative made sense, and we believe now it makes even more sense. And so it makes us even more determined, if you like, to push forward. We're planning an energy efficient mortgage label. We're putting in place the legal infrastructure. We're planning, a website like the Covered Bond website in the coming weeks and months. And so we really believe that this has transformative potential for the market, even in these difficult times. And the other thing that I think it's quite a nice anecdotal kind of comment, but I think the fact that everybody's been working from home has meant that people look at their homes in a different way. To the way they did perhaps 6 months ago. And we've heard, again, anecdotally in some countries, that there's been a massive increase in the number of requests for renovation loans because people realize my home doesn't work for me in this way. And it's quite possible. I think
that was the point that Sanna made before.
Yeah, exactly. Well, right? Exactly. Anyway, so it's quite possible that, in the coming months and years, we might work from home more. And so this almost presents a perfect opportunity, not only to renovate, but to renovate your home in a sustainable manner at the same time. Not just try to rearrange the space, but to make it, more comfortable to live in. We know that sustainability has an impact on well-being and productivity. So I think that, there are so many interesting moving parts here, but they all point very, very kind of clearly in one direction, and that's sustainability. And it makes sense on the mortgage side. It makes sense on the covered bond side. The securitization side, it just makes sense, full stop, I think.
I will ask Saida to comment with the famous last words on this, because I know she will not let us down about, let's say, grabbing this opportunity at the horns in a way. Your concluding remark, please.
I think what I worry about is inequality, I guess, because banks will do some credit management, and that's where I think policymakers have to come in. I don't know, KFW or whoever has to come in and see that everything that we're talking about is just not for people with jobs or people, who are living in certain part of the world, and that it happens for everybody. That's very important, because otherwise we're going to get disruptions, and this is a chance, as Jenny really points out, all the policies that are coming, it really has to take the social side in consideration, and the environmental side. And we have to always remember, it's all for the future generation, So all the goals we have, 2030, 2050, or maybe won't even live then, we really have to think in the future. This is the opportunity, and that's why, we as investors, we need to talk to companies, and companies have to think that their CSR report is just not a CSR report. It really is investing for the long time, and loads of opportunities are there as well.
Thank you so much for sharing so openly your views. Also thanking, of course, Dominique and Roelfien. In fact, we realize it's a decisive moment in history. Linking sustainability to fiscal and monetary policy is not only an opportunity, but probably a necessity. Also reminding that we leave mountains of debt to future generations. So at least we should try to make the world a slightly a better place. Maybe for once, also in conclusion, that Europe has been fairly bold in responding, far away from the too little, too late type of, let's say, behavior we have often observed. It's been impactful, and we've also seen, let's say, covered bond playing a, let's say, decisive role, dual recourse instruments in a way, having shown their resilience once again, so to speak. So let's seize this opportunity and let's give financial services a purpose in solving this crisis. Ladies and gentlemen, thank you very much for joining us today, and have an excellent day. Bye-bye.